All right, we're focused. Hola mis amigos, ¿cómo están? Aquí su amigo Raúl. I haven't done a video this week, so I wanted to make sure that I brought you an update. Today is actually a very, very important day. Today, the Fed makes the decision as far as how much they're going to raise rates for the second time this year. The first rate hike was only 0.25%. And everyone is predicting that the rate hike for today is going to be about 0.5%. Once again, keep in mind that all the information that I bring you on these videos are for education purposes only, not to be taken as financial advice. But there's a good possibility that if they do the zero point 0.5 rate hike, we could see some type of a recovery in the market. Now, it's very unlikely that we're going to see the 0.25 rate hike that we were anticipating originally, because they had originally said we're going to raise rates by 0.25%, and then we're going to raise rates again by 0.25%. Then they changed their minds and they said we're going to raise rates by 0.5%, and then that's when the market freaked out. Now, here's what could potentially happen. If they come out today and they raise rates by 0.75%, that could be catastrophic. Why? Because once again, the market doesn't like uncertainty, and whenever things change that are unplanned, then that's when the market freaks out and things continue to sell off. Now, what does this mean for you, whether you have any money in the market or not? What this means for you is that, guess what? Mortgage rates are about to get more expensive. We are already seeing the effect of more expensive mortgage rates in the housing market. If you ever go on Zillow or Remax or any of these huge platforms to look at homes for sale, you're starting to see some more inventory, but you're seeing something that you hadn't seen for a very long time. You're starting to see price cuts. Now, these price cuts might not be astronomical. Somebody might cut prices by $1,000, by, I don't know, 5,000, 15,000, depending on the price of the home. However, this means that it's a step in the right direction. Now, we are still a very, very long ways away from being in a buyer's market for real estate versus a seller's market. But 6 months ago, nobody was cutting prices for anything. So seeing a reduction in prices means that we are moving in the right direction. Why are we moving in the right direction? Because the government is raising interest rates, which means mortgage rates are higher. When mortgage rates are higher, it limits your purchasing power. For some people, at this point, they're like, you know what? I can't afford to buy a home right now. I'm just going to wait. So that removes those individuals from the market, gives opportunities to other individuals that can afford a home. They just really haven't been able to find the home that they want at the price point that they want. You have to keep in mind that for every 1% that mortgage rates go up, it tends to lower your purchasing power by about 10%, because it does make a drastic difference in the amount of home that you can afford. But like I told you before, you need to focus more on the value of the home and not so much on the interest rates, because the government at some point will have to lower rates again, because they don't want to keep rates high forever. Because if they keep rates high forever, then we'll go into a massive, massive recession. Not just a normal recession, but a massive recession, because nobody can afford to do anything anymore because it's just so ridiculously expensive to borrow money. But right now, for the time being, because we have the highest inflation numbers that we have had in 40 years, then the government is raising rates, and they're going to continue to raise rates as much as they need to and as aggressively as they need to be able to control inflation. And also, we're going to see that reflect in the stock market, and we're going to see that reflect in the housing market. So if you have been in the market for a home, just be a little more patient. Yes, you may finance at higher interest rates, but just focus on buying a good quality home at a good price, and those financing numbers can always be readjusted in the future. But I'll keep you posted. The Fed meeting is at 2 o'clock today, so we'll see what curveball the federal government throws at us. Once again, my intent is to bring you the most current and the best financial information, keep you updated, keep you current on what's going on, and I'm hoping that throughout the course of 2022, even if we do happen to go into a recession, which is very, very probable, I'm hoping that this will control inflation, and this will give us that breathing room that we need in the housing market so that people can find their dream home. So thank you so much for watching. Don't forget to subscribe to my YouTube channel, like this video, whether you're watching it on YouTube or Facebook. leave me a comment, share it, please share it with your friends, share it with your family so that they can be informed, because a lot of people don't keep up with this kind of stuff. And my goal is to just kind of simplify it, explain it to you, keep you informed so you can make better financial decisions. You guys have a wonderful day, and I'll bring you another video after we figure out what the heck the Fed is going to do. Thanks. Peace.